Hello, traders. Just wanted to keep you on the right track with market profile and the power it holds over anything else out there. And the reason is it is based on real-time supply demand situation. On the left side, you see the banking chart, the profile levels which we have forecasted. After 60 years of having created a chaotic movement in the profiling community, we finally found a way to simplify and bring science into supply demand situation. Now what you're looking at is the forecasted level from the 1 week activity and the projected level for the next day. So when the market closes here, we have these levels forecasted for you. After midnight, we post it. If you have issues, you can always do right click and recalculate all indicators. So you can observe that the market is nicely vibrating first of all to these levels. All right. It gets to green level, some 70% of the time it will just keep bouncing on the green levels and one or two levels higher or lower. We know how to qualify that too. You can see here, it gets very close to these levels, pinpoints it. Higher it goes above the green level, below it goes further down this green level, snapback is expected. So that is first thing you already know. And we have this oscillator conditions. This is market profile oscillator, looks like any other oscillator. It is based on market profile logic. The formulas have been tuned for that logic. It's like market going 1-2 standard deviation away from the mean, and it does a snapback. S&P is an amazing market for snapback. So we will take just a quick example, 5 minute, because and then this is the chart for hedge fund, multiple cycles, compression coming together for liftoff. If the bigger cycles are flat, you can just keep bouncing on highs and lows on the smaller midterm cycles. There are 4 cycles we are tracking here on the left side, and then 3 on the middle, and then right side is a commercial activity of inventory control. So let's see if you can just, every chart has a power to be traded on its own. We have supercharged it by adding more features. So now let's take this as an example. Here is the chart where you will be doing all your retest failures, double tops, flag patterns, channels, every knowledge you have accumulated over the years, you will use and deploy that on this area. Okay, that's all you will do on this chart. I'm just looking at 2 touch points, horizontal line, vertical lines, channels, inside channels. You can do a lot of anything you know about technical analysis, apply on this chart. So what is the expectation when we have 2 point there? You can also do a line break. You can do a lot of things on this chart to get in precise entry. I can do this line break, right? We can treat this as a shortest term trend, sliding through, it breaks, right? So you can do all these tricks on this chart. And this is not a price chart. So let's see, I'm expecting market will be touching and turning at these levels. So 1 touch, 2 touch, it should be going up here. We don't know because this is not price chart. So let's see if I can mark this chart and see how it went. So it should be long here. And it should be long here because of this retest. It should be short here. Third touch. It's already explained in 29 videos, step by step. Nothing has been left behind. Our philosophy is pretty simple. No man left behind. We are Marines of financial world right here. So just that should be enough. And see, this is like last 2 days of data. All right. Okay, so let's see how it worked out on the price. This is all, none of these charts are time charts. So this was expected long, and you can see on this chart it precisely came to our level. Look at the oscillator condition. There are two oscillators, two oscillators are in a good condition. Then we have volume also oversold. This is volume RSI at our green level, missed by a few ticks. And then we had a good, beautiful long 15 points. These are the points we are after. 10, 15 points. We're not after 1 point, 2 point ticks. All right. These 2 points had this third point. Momentum was down, so this was a short precisely right here. You can see my cursor. Precisely in one day, you made like 50 points if you are a smart practice trader. Okay. Then market went down and then came up again, and it touched this point precisely. Oscillator condition here, go short also. There we go. Boom. 15, 15, 30. Probably made 50 points here if you had options. Playing 100 options, you should be up $50,000 on 100 contracts. Risk also goes up because you need larger account to do and play this game. So right now it is doing a retest on this. As you can see, live market is already dropped 4 points. All right, that's how it goes. So keep that going, momentum going, and keep trading. Let's look at this one. We also said this is going to be retest failure at this point. Now first it came down to the green level, came up, did a retrace, a bounce, and this is where it also gave a signal right there. Market had 1, 2 compressed waves, and then we had divergence in on balance volume, and there we go, long you go. This was a perfectly good day. It looks like all day, huh? Starting from midnight, if you're trading futures or whatever. This was retest failure on the horizontal side. We had no oscillators confirming any. It's like all flat. So that is that. So we don't have any oscillator. They're all flat. So if that is the case, if I see a red bar, you can also see that momentum started shifting down after that. So we could have taken that shot also. Better shot was right here because we had 1 or 2. We had 2 oscillators conditions at the green, 1 step up above that. Now on this chart, let's see. I have to go and look back. Was there any retest scenario or not? So I need to look back from here. So this was a retest scenario also right here. We didn't go that far back, and this was expected short location. There we go. All right, we picked up all the swings here. This one, this one, this one, this one, this one, and current one. I mean, how precise you want to be in your swing trading. God bless the world of trading. Thank you.